Good morning and wishing you a wonderful Wednesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about. Data shows that factories are recovering across the world. The Fed is buying mortgage bonds at a record pace. Walmart Plus and Zoom. The S&P 500 Nasdaq rose to fresh highs on Tuesday after manufacturing data showed the economy continues to bounce back from the coronavirus shutdowns. US manufacturing activity accelerated in August, growing for the third straight month and topping the expectations of many economists. So according to ISM, the growth was driven by new demand, faster export orders, though the picture of hiring was mixed. S&P 500 climbed 0.8%, opening September with a new record after its best August since 1986. The Nasdaq Composite was higher 1.4%. And Dow was higher about 0.8%. Data out of parts of Asia and Europe showed that factories are slowly recovering from the sharp output cuts that accompanied the coronavirus lockdowns. But in all of these data, the activity is recovering while the jobs have not really come back in the same pace that we could have expected. Germany, Europe industrial powerhouse, recorded a stronger recovery with the PMIs rising to the highest level in almost 2 years. But even with the revival in previously weak export orders, manufacturers reported that they were cutting jobs. The Europe Stock 600 was down by about 0.3%. A gauge for China's manufacturing activity for last month rose to its highest level in nearly a decade, supported by strong domestic and external demand and faster production activity. It marked the fourth consecutive month that the Caixin China Purchasing Managers Index held above 50, a mark separating contraction from expansion. The Shanghai Composite ended the day up 0.4%. Some of Tuesday's biggest gainers included Walmart. Walmart rose about 6.3% ahead of the launch of Walmart Plus. Walmart Plus is a $98 a year membership that includes free grocery delivery, a discount on gas from Walmart parking lots, and the ability to check out via a mobile phone in stores. This new rollout boosted shares. Technology companies also helped the S&P 500 higher. Netflix was higher by about 5.1%. But the story of the day obviously has to be Zoom Video, which jumped 41% after the video chatting software developer raised its outlook for the year for the second time in recent months. In the bond market, the yields of the 10-year fell to about 0.67 from 0.69 on Monday. The Fed is buying mortgage bonds at a record pace and with no end in sight. The central bank has purchased 1 trillion of notes in the last 6 months to blunt the recession and now owns a third of bonds backed by American home loans. The spree has pushed mortgage rates lower, with the average 30-year rate falling to 2.91% as of last week from 3.3% in early February. Tesla is plunging into insatiable retail demand to help power continued growth, selling about 5 billion of shares. The sales, if any, may occur as block trades, at market offerings, or open market transactions. Tesla plans to use the proceeds to strengthen its balance sheet and for general corporate purposes. On the FX side, at the start of the New York trading session, Euro USD raised above 1.20, but this psychologically significant level was rejected quickly and aggressively. The reversal is no surprise given the mixed data that we saw out of the Eurozone. Also, the rising coronavirus cases in Spain show the country is well in between the second wave. So on Friday, the country reported 9,779 new cases, surpassing the peak in March. Although the Eurozone data did contribute to the decline in the euro, the catalyst was really the strong ISM number which came out of the US, which we spoke about. Meanwhile, the Australian dollar weakened after the Reserve Bank of Australia left monetary policy unchanged. RBI maintained its view that the recovery will be uneven and bumpy, but it is underway in most of Australia. Still, the central bank feels that a highly accommodative monetary policy is necessary and increase the size of their long-term funding facility to ensure ample liquidity. Second quarter GDP numbers are scheduled for release later today. Q2 was tough for many countries, and Australia should be no exception. The country is expected to fall into recession, with the contraction in Q2 likely to exceed the market's negative 6% forecast. If it happens, this will be the first technical recession that Australia has experienced in 29 years. So that's your update. Stay safe and healthy, everyone, and speak soon.